How do you view IPOs, and is it something that you're excited about?
Yeah, definitely something I'm excited about. As we know, the initial IPO base is that Mike Webster primarily developed was the only base that O'Neill added to his original system. So that in itself says something, and you guys have a good home study course. So yeah, I'm very interested in these, both at the IPO base stage as well as after the due diligence phase, as explained in the Life Cycle Trade book, which I think is one of the most important books after O'Neill's series of books for us to have. So it has been, speaking of not dead yet, it has been dead lately. That was a timely comment. Um, so particularly in bear markets and correction, the big money is going to exit the new first when the tough gets going. And in fact, here's a bad IPO chart in a bad market. So this one came out. This was in 2002. So we're in the .com bear market. Terrible chart. You're like, oh yeah, I would never touch that. Goes from 18, plunges all the way down to 5. Well, this is actually the IPO chart for Netflix, which went on to become a great stock and killed Blockbuster, and you could make a lot of money. So it is important to know what kind of market we are in. And 2025 has been tough to find tradable IPO bases. A lot of them are in the due diligence phase in the book that I mentioned. So right now is the time where I'm doing a lot more studying and due diligence than actual investing. So I'm going to share kind of from a, 40,000 flyover view because we could do a whole show on my IPO process and what I look at. But, what are
This
some
is
of the
your
key?
whet the appetite
Yes.
version. Yes.
Correct. So what do I look for? What's important? Well, first I want to look for profitability, including the rare triple digit earnings and sales growth. ALAP had triple digit earnings and sales when it came out. So Amy Smith really likes that. She'll and I will talk about IPOs sometimes. I want to look for the N. Of course, it's a new stock, so every IPO is in O'Neill's system. But how does the company change the way we work, live, or play? I want to look for good underwriters. Generally like to see JP Morgan or Morgan Stanley or both of them in there. I want to look for ones that are priced $10 or higher. More's better, 20, 25, $30. I want to look to see if they're raising real money. Generally 250 million, 300 million or higher. I mean, these little IPOs that are raising 10 million or just 100 million, probably going to be a long time before they're liquid tradable, IBD methodology type stocks. So these are just some of sort of the key metrics. What do you do? What do I do? Well, watch the roadshow. And you may say, I don't even know what the roadshow is. So in the old days, management would go on the road and present to the institutional investors. Well, now it's done online. So thank you, COVID. So there's a website where you can see these, retailroadshow.com, but they disappear. They go away forever once the IPO, really on the day that it prices. So I don't know if that's the SEC rule, but this is your chance to see management presenting the best face they have on their company. So I find these very valuable. And along with those, that will also answer the next question. Is this company founder led? Is the visionary still piloting the ship? Because that makes a difference. And here's some, again, charts may be wrecked now, but these were
Yeah.
very tradable and you could make good money. So own cloud. I still remember the roadshow. The founder, he's a triathlete guy who invented those shoes, and he talked about how he cut garden hoses in half and glued them to the bottom of the shoe he was trying to build. And you can see that in
Hmm.
their actual product. Kava is co-founder led, and the chairman of the board is the guy that grew Panera Bread and was their CEO and took them through the transition from brick and mortar into mobile ordering, all that sort of thing. Some other recent ones, FIG, FIGR, Beta are examples. And if you watch that roadshow and the CEO, or just look on their website, if he was just added in the last 3 years, I kind of know they brought that guy in to take this company public. His expertise not in doing what we do, but it's in getting us in the public market. And that's okay. but it's not as attractive to me as when the visionary is still running the company. I want daily liquidity. I need $20 million or more per day. More is better. That comes right out of the life cycle trade.
Just real quick, 20 million, that's dollar volume, right? So
correct, daily dollar volume.
Yeah.
Correct. Yeah, I've switched. I know Bill in the book talked about daily share volume, but because we can have these high price stocks like some of the housing stock, I use daily dollar volume always.
Stocks don't split like they used to.
Correct.
And I mean,
Correct.
it's, for good reason. There's, a lot of market mechanics that changed. So, yeah.
Yes. So some other things. Well, just to let you know, so I look at all the IPOs that come out, try to study them. I subscribe to a service that just kind of clues me into most of them. And if you just focus on profitability and liquidity, you really narrow your pool that you have to do any due diligence on, because really only approximately about a third of all the IPOs are profitable each year, and less than half of those will be liquid. So if I just stick with that, I've cut my work significantly, and I'm probably seeing the best of the best. Want them to price $10 or higher generally. Oh, I had a duplicate in here. Sorry. I had that in there early. Also look at where's the money going. So you mentioned, Justin, about how companies, they're raising a lot more venture capital and they're coming to the market later. So there's less meat on the bone, I think is the way to think about that in real life. So where's the money going? Was this a company that venture capitalists loaded up with debt and the IPOs just to pay off debt? It's better if it's going to expand and run the company. So I am looking where the money is going. So I had that in there. Is it all going to existing shareholders? That's not good either. Now, some of it can go to the existing shareholders, but I really want it. I need them to be on Shark Tank. I need them to be raising this money to grow the business. I think that's better. And just so you know, I mean, most IPOs, I would say on average, they're only selling off 12 to 14% of the company. So the rest of the company is not being sold in the public market. That's what's held by the insiders and original investors still. So just as a tidbit, I was shocked. I would have thought they're selling off half the company, but it's a much smaller percentage. So let's go over to Market Surge. Let's just look at some recent IPOs. Let me get out of here. I just put them in a list down here, and I'll just kind of briefly comment on those. So this one, great earnings line. You can see that on the weekly chart. Now I do most of my IPO work on the daily and the 60-minute chart.
Okay.
I think IPO charts come in dog years. So on the hourly chart, I'm treating, let's go to 60 minutes. You just do that in MarketSmith. So I'm treating these as like if this was a day, and then I'm using the daily chart and treating those bars as if they're weeks. Not literally, but you get the concept.
Yeah.
You get what I'm talking about. So this one's a profitable one in the medical space. Roadshow was very interested. They have this targeted, patented process down at the molecular level. It's over my head, but it was clearly new. It tried to break out of the IPO base. We're in a tough market, and it failed, so it's forming a new one. I tried this a little bit early. I got stopped out. It is what it is. I do on my chart. So here's the IPO price. I draw a red line. So this one IPO to 80. Okay, good price, good IPO price. And it has not undercut that. I also have started adding a gray line from the life cycle trade where Eve and Kathy and Eric and Kurt, where they talk about, that's the first weekly close to just kind of watch. So I don't have a trading system or a rule based on that yet, but I've started putting it on my charts to study. So I thought this one was interesting. Again, I'll put the underwriters on here. You have JP Morgan. I mentioned them earlier. You have a good number of underwriters, so you have some broad appeal. This one shows the 50-day line hadn't showed up. So it shows 22 million per day, but until that 50-day line shows up, this may be skewed a little bit higher. I have a way of tracking the true dollar volume, but we won't go in that today.
And I will say that sometimes what I do is, early on, because when the IPO comes out, the volume is really skewed. Sometimes I'll actually back that out personally, just so I can kind of get a sense of where's the volume like kind of settling down after the first 2 days. So yeah, I'd use a little formula that kind of takes that out. But to your point earlier on Netflix, market's getting in a little bit of choppiness here, and it's no big surprise that the IPOs are getting hit a little bit harder. It's IPOs are maybe a gauge of the risk appetite, in the same way that a lot of folks have looked at Bitcoin and Ethereum and the cryptocurrencies as a gauge of risk appetite, and so it's not a surprise to see here. But like what you mentioned with Netflix, it doesn't mean that these are dead forever, right?
Correct. And this one, again, while I don't use the weekly chart, I do want to look at the earnings line. So this one's stellar. So, again, let's see if it can build a new full and proper base and maybe give us an entry. If we look at the 60-minute chart, I've just drawn some lines. It hasn't quite undercut that prior low. So watching to see if it does that, just kind of studying it and looking at it. But the triple digit earnings and sales certainly always grab my attention.